Welcome, welcome. This is Inside India. We're coming to you live from the shores of Goa, inside India. It's Energy Week's day 3, where we're going to be focusing right now, for the moment, on the headlines. The Fed leaving rates unchanged as expected and signaling they're in no hurry to cut rates. Chair Jerome Powell also emphasizing the importance of Fed independence.
First of all, it will be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone.
The dollar rally losing steam despite Treasury Secretary Scott Bessent's assurance of a strong US dollar policy and telling CNBC Washington is not intervening to shore up the yen.
Are we intervening in the currency market right now, strengthening the yen? Is that happening?
Absolutely not.
And India moves to significantly slash tariffs on luxury EU cars a day after finalizing a highly anticipated trade agreement with the bloc. All right, well, let's go to JP Yong for a check on the Asian markets. There's a lot of activity happening potentially in the next half an hour, particularly in China. JP, what do you got for us?
Yeah, Amitaj, good. Happy Thursday to you guys out there. And I don't know if you got the memo and why you chose to wear red, because that's been the predominant color for many equity indices across the Asia-Pacific region. If you take a look at this wall, there are only a handful of standouts because stocks from Tokyo to Taipei are selling off. The Hang Seng today in Hong Kong now rebounding on the back of a surge in some of the property developers like China Vanke and Country Garden on renewed hopes of possible support for these empaneled real estate developers. But it's in the Nikkei 225 we want to go and really check as to whether or not that stronger yen is indeed weighing on Japanese equities. The Nikkei 225 and the topics both in the red so far today. And as you mentioned, as you highlighted a while ago, the Japanese yen also finding strength against that softer dollar with questions as to whether or not there is some intervention on both sides of the Pacific from Tokyo to Washington, D.C. at the moment. And the yen now sitting at 153 against the U.S. dollar. One of the standout markets today, Amitosh, happens to be in South Korea with two blockbuster earnings again from, you guessed it, the memory chip giants today. And diverging fortunes despite the fact that Samsung and SK Hynix both posted better than expected profits, and again record surging profits because of the shortage and surging demand for memory chips on the back of the AI craze. Samsung Electronics, though, down by more than 1% because while their DRAM sales are also looking very promising, they did flag that there is a sign of a possible slowdown in their smartphone sales, which they'll have to boost, which is why they're down by 1%. No signs of hits, though, for the kings of DRAM, SK Hynix, which has now surged by almost 2% intraday. Though we want to take a look at one other market that's really caught the attention in the emerging market space here, and that is Indonesia, because the Jakarta Composite has declared a pause, actually, once again, has halted trading today because of an intraday decline. You can see it there, the Jakarta Composite falling and plunging by more than 10% after MSCI raised investability concerns around the free float of certain markets and thus also posed the threat that they might be lowered from emerging market to frontier status. According to Goldman Sachs, they say that if they are lowered to frontier market status, they could see equity outflows of up to $7.8 billion, and a lot of this around the free float requirements. This is something that we also brought up with the president of the IDX earlier on today. Here's what he said about making sure the ultimate beneficiary owners that might hint at more control over these companies actually is something they want to address.
I think if you see currently what we have done in Indonesia, that more than 5% shareholders have to be disclose their UBOs. Even the founders also have to disclose their UBOs. Currently, what are currently stressing by the MSCI is the one below 5%. So we are currently on discussion also with our OJK or FSA currently try to more put on UBOs, not only more than 5%, maybe some slight below 5%. This is something a discussion that currently we are doing it with our FSA and other SRO, and also try to increase the category or investor types of the investors, like the one is done it in India, for instance.
Now, the IDX will have until May of this year to address some of these free float concerns, and that is when the MSCI will decide whether or not they will lower or downgrade Indonesia from emerging to frontier market status. 4 months, which is one of the reasons why we're seeing the IDX as the outright laggard so far in today's session, plunging by more than 9%, Amitosh.
Well, thanks so much for that, JP. Yes, I did not get the memo about wearing red on a day when markets have turned kind of red. Well, on to one of our top stories of the day, and the market obviously feeding into this. The Fed kept its rates unchanged overnight as expected. Fed Chair Powell, as expected, was tight-lipped about when the Fed will actually cut next, but said he sees diminishing risks to inflation, and CNBC's Steve Leisman broke down the latest Fed decision in this report.
The Federal Reserve, after 3 straight interest rate cuts, kept rates unchanged at its January meeting at a range of 3.5% to 3.75%, and hinted it may stay there for a bit until the data convince them that it's time to cut again. Behind the shift from cutting to neutral, an upgrade in the economy and a downgrade in labor market risks. The Fed in the statement said the economy expanded at a solid pace. That's an upgrade from moderate in the prior statement. It said the unemployment rate has shown signs of stabilization, and it removed the phrase of there being downside risks for employment, while it said inflation is just somewhat elevated. The Fed also used language in its statement from December that signaled a pause this time as well. Powell wouldn't rule out future cuts, but was clearly not signaling any imminent reductions.
We think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
There were, however, 2 dissenters. Both Fed Governors Waller and Myron wanted a 1/4 point cut. Waller, of course, remains a candidate for Fed chair, and Myron is only on leave from the administration. Whatever their reasoning, dissenters can sometimes lead the way, so it may be that rates are coming down, but markets still don't see another cut till June and have only a 60% probability on a second cut in December. Steve Leisman, CNBC Business News.
All right, well, the U.S. dollar in focus because it's pulling back from yesterday's 4-year low, currently at about 96.8, just down about 0.2%. Now, CNBC also spoke with U.S. Treasury Secretary about this and asked him about the U.S. the U.S.'s dollar policy and whether it was, getting involved with yen intervention. Here's what he said to us.
Well, again, U.S. always has a strong dollar policy, but a strong dollar policy means setting the right fundamentals. And I think that with President Trump, with the One Big Beautiful Bill, with our regulatory policies, we are making this the best place to come, build your business, have tax certainty, regulatory certainty, energy certainty, and over time, the prices on the screen can fluctuate over 6 months, a year.
You don't worry about dramatic weakness in the dollar?
That, again, if we have sound policies, the money will flow in. And we are bringing down our trade deficits. So automatically, that should lead to more dollar strength over time.
Are we intervening in the currency market right now, strengthening the yen? Is that happening?
Absolutely not.
The Indian market's also coming online in about 40 minutes. There's a lot that it's going to have to see in terms of sentiment and data that's come in. What is being indicated at this point in time is that Nifty 50, muted or perhaps slightly lower. That's what we are seeing is going to be the start. The Nifty 50 jumping about 160 points from Wednesday's start to close. This is a majority of economists polled by Reuters saying that India's central bank will go ahead and hold its key interest rate at 5.25% through 2026. The market also tracking mixed global market cues ahead of the release of the Economic Survey 2026 right here in India before the budget. Budget, remember, being on Sunday. If the survey says growth is strong but uneven, don't expect a big stimulus in this budget. The rupee hitting that historic low of 92 against the USD yet again after hitting it on Jan 23rd. So all of that playing into the market sentiment later today. More details also emerging from the landmark agreement that India and EU signed, the historic one, the mother of all deals. India was expected to sharply cut import duties on high-end European cars, opening its protected auto market to brands like BMW and Mercedes-Benz. An Indian official telling Reuters that tariffs on luxury petrol and diesel cars will drop immediately to around 30% from as high as 110%, covering up to 100,000 vehicles a year across price bands. So a lot of conditions. Now, higher priced cars will see the biggest cuts, while import caps will gradually expand over the next decade. India will also lower duties on European electric vehicles after 5 years, while continuing to shield domestic EV makers. Meantime, our colleagues stateside also asked U.S. Treasury Secretary Scott Bessent about the India-EU FTA. Bessent says, he finds the Europeans disappointing.
Again, they should do what's best for themselves. But I will tell you, I find the Europeans very disappointing because the Europeans are on the front line of the Ukraine-Russia war. The Europeans, India started buying sanctioned Russian oil, and guess who was buying the refined products? The Europeans. So the Europeans have been funding the war against themselves, and like something that you couldn't have made up. The U.S. sanctioned or put a 25% tariff on India for buying the Russian oil. The Europeans were unwilling to join us, and it turns out because they wanted to do this trade deal. So every time you hear a European talk about the importance of the Ukrainian people, remember that they put trade ahead of the Ukrainian people. Trade, European trade, more important than ending the war in Ukraine.
Meanwhile, momentum is building for a trade deal with the U.S. days after India's petroleum minister telling us that the U.S. talks are at an advanced stage. We are now hearing even more. Sources say that India has made significant progress in trade talks with the United States, and a deal could be closed. This according to CNBC TV 18. Officials, remember, on both sides are said to be in regular and close contact, while negotiations described as constructive and steadily advancing. Sources also saying that India continued parallel discussions with Washington even as it was finalizing those deals, those trade pact with the European Union, stressing that the EU deal was not pursued at the expense of the US. All right. Also, India's industrial output grew at its fastest pace in more than 2 years in December, beating expectations on strong manufacturing and mining activity. Government data showed output rose 7.8% year-on-year, up from a 7.2% in November, and well above forecasts of 5.5%. Joining us now to discuss not just that, but everything that's happening, Sonal Verma is Chief Economist, India and Asia, ex-Japan at Nomura. Thanks so much for that, for joining us. And Sonal, it's always great to have you on CNBC. It's a pleasure, really. And thanks for being patient with us as we came to you. Now, the latest data, what we just spoke about, that Q4 GDP growth is going to be potentially strong based on that data that we just talked about. What high-frequency data have you been seeing that may suggest the same thing?
Yeah, I think broadly, the last 2-3 months, we've seen the impact of GST cuts come through. So high frequency data related mainly to consumption. So things like passenger vehicle sales, but also commercial vehicle sales, credit card transactions. And now, as you said, the industrial production numbers. I think in general, these numbers have been positive. Now, GST-related impact on consumption, of course, is expected to be a one-time boost. But I think what's also changing is we are now transitioning into this one-year horizon where the lagged impact of past policy easing is also likely to be felt. So we do think cyclically India's economy is at a turning point, and a growth recovery led by consumption, but also led by investments is likely in the next 12 months. So there's more leg to go.
And there's a lot of global cues that the RBI will be looking at ahead of its decision in a couple of days, the budget also coming, and the Fed choosing to stay on hold. What does it mean, effectively for India? How could it change things in terms of the budget, the RBI? Because you have the RBI rate cut, you have capital flows, and a big concern has been the rupee over the next 6 months, perhaps.
Yeah, budget, of course, is the immediate focus. So I think the clues in terms of the fiscal path ahead, but also the broader reform agenda of the government, I think those clues will be quite important, both domestically, but also foreign investors are watching what the priorities are. The RBI, I think, is in a fairly good place. They have delivered 125 basis point in rate cuts. The main focus right now is actually ensuring transmission of the cuts that have already been delivered, because the RBI's FX intervention has drained durable liquidity, and we've seen front-end rates actually move up at a time where banks' credit deposit ratio is also picking up. So the RBI's policy next week, we are not expecting any change on policy rate. We think that remains unchanged at 5/4 next week. But really more measures on liquidity to enable faster transmission is likely to be a bigger focus.
Yeah, I just want to understand, the conversation around the Fed's independence in the U.S., how that impacts general, sentiment globally. How do central banks react to that right here in India? But also, if you had to take a guess, what would we expect first? A Fed rate cut or an India rate cut in the year 2026?
Yeah, I think, from global central banks' perspective and from the RBI's perspective, independence is quite important. There's always the fiscal monetary coordination, and that is important, particularly in EMs like India, where, food is half of the CPI basket, and keeping food inflation down also involves active government intervention on the supply side. So there is some coordination, but the independence of central bank is quite important. And from the RBI's perspective, it's really these spillovers from potentially what Fed independence concern does on dollar capital flows that the RBI has to manage. But otherwise, I think from, the RBI is, as I said, in a good place. And on your question of who cuts first, I mean, India has already delivered 125 basis point in rate cuts. We do think we are closer to the end of the rate cutting cycle in India. We do expect one final cut from the RBI in April. And for the Fed, we are expecting 2 more rate cuts. But once we have the transition to the new Fed chair, so we have 25 basis point more in cuts in June and September from the US.
I just want your view also as a final question on the EU-India FTA. The question has been how much of that, when it is implemented, and I know there's some time for that, will it impact India positively? Will it offset the US tariffs on India? Because the news has been saying for some time that, yes, we're very close to a deal, but there are others who suggest that it may not happen till the midterm elections in the US.
It's a major positive. And it may not fully offset the U.S. tariff impact, but it is a major positive, including on sentiment. Our expectation is that the actual implementation will be in 2027. So really, from India's fiscal year perspective, it's really FY28 or the year starting April 2027 when the benefits will start to flow in. We do think it's important in a number of ways. The reduction in duty on India's labor-intensive sectors does create massive opportunity for Indian exporters. And India, reducing its own tariff on things like EU auto is also an important signal. It's not just India trying to integrate into global value chains. It's also one of the fastest growing markets, fastest growing consumer markets. And therefore, it is ready to open up to foreign firms to take advantage of this growing demand, not just domestically, but also use India as a sourcing base. And EU companies have a competitive advantage in sectors like autos, but also on pharmaceuticals, engineering goods. So we think that India could and should become part of the EU-centric supply chains focused on some of these sectors. The initial work we've done basically suggests that, once this is implemented, the immediate benefit to India from the trade deal could be, from the EU trade deal could be about 0.1 percentage points in terms of incremental GDP growth relative to a baseline of no deal. But in 4 to 5 years' time, when you see the full impact play out through exports, investment, productivity, the growth boost could rise to as much as 0.2 to 0.3 percentage points.
I can tell you this, Sonal, I've been trying to get those numbers for a while, and you're the first one who's given it so clearly in such detail. Really appreciate that. Sonal Verma from Nomura giving us those particular details. All right, well, we're going to be covering a couple of different things coming up next. We're in Goa. It's beautiful. Wrapping up the India Energy Week. We'll bring you an analysis of the conversations that we've had there, the key takeaways from that conference right from here in Goa on the other side of this short break. Welcome back. We're coming to you live from Goa during Energy Week right here in India, but we're shifting focus to what's happening in China because the British Prime Minister is there. Keir Starmer meeting Chinese President Xi Jinping, and Elaine is getting us all the details of what's happening there. Elaine, what's up?
Hey, Amitosh. So Starmer is visiting China, the first prime minister from the UK to visit the country since 2018, and his bilateral meeting, long awaited with President Xi Jinping, has just started. And he was earlier welcomed by Zhao Lizhi, the chairman of the Standing Committee of the National People's Congress of China as well. We see him speaking now after President Xi made some opening remarks. And earlier, the Chinese Foreign Ministry has also said that this visit offers a chance to enhance political mutual trust and deepen practical cooperation. And we know that trade and economics are the main focus of this trip, as evidenced in the more than 50 executives across finance, manufacturing, and culture as well that are accompanying the Prime Minister. Now, the Prime Minister, after landing in Beijing yesterday, addressed the British business delegates, saying that they are making history and that they're part of the change that we're bringing about. And Starmer said that we are resolute about being outward-looking, taking opportunities and building relationships while always being focused on the UK's national interests. And this is also happening as Starmer has also had political opponents at home criticizing him for not talking more to the countries aligned with the UK while talking to those accused of undermining its economy. But the Chinese Commerce Ministry has said that it will sign trade and investment cooperation documents with the UK and are actively preparing for economic and trade outcomes of this visit. And of course, this visit also comes after, or is the latest in a string of high-profile state visits from a host of leaders from France, South Korea, Ireland, Canada, and just now Finland as well, with the German Chancellor also expected to visit China next month. And later this afternoon, he is expected to meet Premier Li Qiang, and both Prime Minister Starmer and Premier Li are expected to join this UK-China Business Council meeting that is jointly hosted by China's Commerce Ministry and the UK's Department for Business and trade. And yesterday, after he landed, the UK delegation also feasted at In-N-Out, not the US burger chain, but a cuisine of Yunnan restaurant chain that is known for the wild mushrooms. And Janet Yellen, the former US Treasury Secretary, also famously ate there a couple years ago, apparently including magic mushrooms that have hallucinogenic properties. But we'll be watching this bilateral meeting between Prime Minister Starmer and President Xi very closely. Amatosh?
Thanks so much for that, Elaine. I'm sure we'll come back to you as and when there are more developments and announcements that we expect later today. Now, airports across Asia are stepping up screening for the deadly Nipah virus. This after 2 people contracted the virus in India's West Bengal state just last month. India saying it's ensuring timely containment of the virus, contact tracing the 2 confirmed cases. So far, all identified contacts have tested negative. Nipah has an estimated fatality rate of 40 to 75%. Other updates also, the Deputy Chief Minister of India's western state of Maharashtra was killed on Wednesday when a chartered aircraft crashed and burst into flames. Aviation authorities said Ajit Pawar was traveling to his home region to campaign in local body elections. 4 others on board, 2 staff members and 2 crew were also killed. The aircraft, a Learjet 45, operated by VSR Ventures, went down shortly after departure, according to the regulator. Pawar, a senior political leader allied with Prime Minister Narendra Modi's BJP party, is survived by his wife and 2 sons. Now, the news of Pawar's death came at the same time when an air show was underway in the southern city of Hyderabad. Now, companies like Russia's United Aircraft Corporation, Brazil's Embraer, Dassault Aviation are taking part, while CEOs from global airlines like Etihad, Thai Airways are also present. Indian Prime Minister Modi virtually addressed the Wings India Aviation Conference and said the country is positioning itself as a major global hub for the production and export of green aviation fuel, something that's been in conversation right here at Energy Week, sustainable aviation fuel. The air show is also focusing on reforms in the sector. Adani Airports called on India to ease restrictions on many seats foreign airlines can sell, saying the limits are holding back its push to turn India into a global aviation hub. Now, Chief Executive Arun Bansal said bilateral air service agreements are constraining growth and argued India needs an open skies approach. The caps are meant to protect domestic carriers and are backed by Indian airlines like Indigo, but foreign airlines say demand far exceeds current limits. India is the world's fastest growing aviation market, with Adani Airports planning major expansions. All right, on the other side of this break, there'll be many more updates. Don't go anywhere, stay with us. We're in Goa. Welcome back. We're coming to you live from Goa inside India. We're covering Energy Week and it is day 3. What can we expect right now? We can expect more announcements after Prime Minister Modi met with global oil executives, Indians also. One MOU stood out yesterday. India's state-owned oil company, ONGC, and its private rival, Reliance, have agreed to share key resources, including offshore supply vessels across their nearby oil and gas operations. Now, ONGC has found it historically challenging to charter foreign vessels, which often take about 45 days sometimes, with multiple government approvals needed. And Reliance and ONGC could soon petition the government to agree to a process that would avoid them seeking repeated approvals in favor of a one-time approval, where an announcement could come also between China and India. Canada's energy minister telling us on CNBC earlier that he will be in Delhi today meeting India's coal and mines minister G. Kishan Reddy. He's already cited interest in supplying critical minerals to India, and Oil India, a key state-run oil company, has indicated its interest in sourcing such materials from Canada. So there's a partnership in sight out there. The minister also telling us that Canada's Prime Minister could come to India in March, indeed, for more such announcements as the relationship warms up after a diplomatic chill for a couple of years. The energy minister giving us some color on the Canadian Prime Minister's ambitious target to double bilateral trade with India from 30 billion to 60 billion by 2030. Brazil's state-run oil firm Petrobras says it has expanded and renewed crude oil supply contracts with Indian state refiners. The deals cover sales of up to 60 million barrels with a potential value of more than $3.1 billion. Petrobras said the contracts with Indian Oil, Bharat Petroleum and Hindustan Petroleum will run through March 2027. And to talk about that and more is Gaurav Moda. He's a partner at EY, Parthenon India, right here with us on the shores of Goa. It's a pleasure to have you with us, Gaurav. I really appreciate you coming on and talking to us. I just want to start by understanding your take on everything that's been happening geopolitically while we've been trying to focus on the developments here at Energy Week. And the big question is, why is it that India can't just stop buying that Russian oil when it continues to tout this idea that we can diversify? We are diversifying. We have so many places to buy from, 40 countries to buy from. So what's the problem? Let's stop buying that Russian oil. And then what happens is that you have the potential of that 25% penalty being completely gone.
Morning, Amitoj. I think we need to put this in perspective of how our Honorable Prime Minister actually started the India Energy Week. He called India the land of opportunity. If you remember our child days, there were other Western markets which were called the same. Today, India is really leading the way in every opportunity in the energy sector. Now, whether you look at core energy around upstream, refining or marketing, or you look at new energies, or you look at the new technologies, all of these, the opportunities are sitting in India for all global growth. In that context, now if you start looking at this global crude geopolitics, India actually is opening up its upstream sector in a major way. We've opened our acreage in the Arabian Sea and Bay of Bengal to actually produce much more oil in India. And you're seeing at the India Energy Week that all global majors are representing and are coming over to see how they can work with India on that. So I think the question is not just the immediate oil from one particular country or not. We are well diversified. But the question is, how do you make this opportunity happen for global majors in India?
No, but you've still not answered my question. Why is it that we can't stop buying from Russia when there's so many other countries willing to sell to us?
All countries are willing to sell. India is an open market.
Yeah.
We're buying from everywhere. It's not just one market. It's a question of where we can get the best crude and the cheapest crude for India.
But that margin that you were getting from Russia, the discount, has reduced and
Yes.
others are offering it. So that's my question, that when you have this advantage of 25% completely being removed if you stop buying that oil, why is India not doing that?
It's all commercial. While in media, in many other public appearances, we may see that discounts are there or not there. But the other suppliers have to step forward to provide at the right price.
Got it. It's very complicated. I understand that also. The other thing that you're talking about, the pulse of Energy Week, fascinating, that India has gone from the idea of energy transition on the list of priorities slightly lower because energy security in this new geopolitical order is more important. Would you agree? Have you noticed that? Because I kind of felt that when we interviewed Hardeep Singh Puri, the Indian energy minister.
India, see, the way India is growing so fast, we need all forms of energy. In that context, let's talk about core energy and new energy in both ways. In core energy, we spoke about upstream. On the refining side, we're buying so much crude of all kinds. India has one of the most complex refineries to process all kinds of crude. We have 80,000 outlets for our 1.5 billion population. So on the core, there's enough requirement, but even on the new, while earlier we were discussing hydrogen in a major way, it's not just hydrogen now for creating green ammonia for European Union, it's also renewables where we have 50% capacity, it's also nuclear. So the shape and the portfolio of our energy is shifting gears. It's not just about only new, it's also about all forms of new, all forms of existing.
Is it happening fast enough when you have targets like net zero by 2070?
When money starts to flow in, I'm a Banya Marwadi. Money starts to flow in, you know stuff is happening.
Yes.
You've heard so many deals in the last several hours.
Yeah.
Those deals actually can convert into tangible money flow. I think this European Union deal can make a big difference for Europe and India.
When you said you're a Banya Marwari, for our viewers, I just want to say that money is in your DNA, so when you talk money, you know what it really means. Let's talk about excavation, because the other focus that I saw at Energy Week was that there is going to be some big discovery coming in the next, I don't know, 5 years perhaps. In the next 1 year, we'll have maybe a slight soft update on that. Are you hoping for that? Are you thinking about that? The reforms, Oil India doing something special, in the Indian Ocean. What's your take?
EY has been working very closely with the ministry, the government, and a number of these oil majors. The potential in Indian acreage exists. It has existed for the last 20 years, and the potential is known to India and global majors. It's a question of converting that potential. Now, whether it's next 1 year, next 5 years, next 10 years, is a function of Indian majors coming together, the technology coming in. So there are global OEMs who are now willing to provide that technology into India, not just global majors. That combination can make the difference.
I'm glad you said this, because we were at the digitization and AI hub at Energy Week. We were walking around getting a sense of how things are going to transform in the coming time. In the last 1 year itself, state-run oil companies have been using AI to effectively understand what the data coming out from down there is saying. What do you see AI's role in helping that transition happen from coal, oil to new energies? What are you learning from this conference?
So there are three aspects of how the transition AI is going to impact India. First impact is, of course, energy security. It's telling us where oil actually or gas exists based on proper data, as you said. Second is AI is now providing India, making India a huge hub of global centers of excellence for all energy majors. Yesterday, we hosted a panel where we had BP, Shell, ExxonMobil, Chevron, all global majors on the same dais talking about India as the center of excellence for them. So that's a major shift. The third major shift, of course, is how AI is reshaping usage of energy in India. We are becoming much more energy efficient, and that is what leads to decarbonization and climate benefits.
Okay, there's one other final question I wanted to ask you. This is regarding India's national green mission. The question is that there are headwinds against any green mission in any country right now because of the geopolitical order, right? So does that slow down our timeline to achieving that mission? Does it change things for us? Or is it possible for both these things to happen, energy security and green transition, at the same time?
India can benefit from both and two more. That's the ask for India from the global. Now, in that context, even if you look at the last 50 years, in the 70s, beyond the 70s, oil crisis also, a lot of green offshoots had started to come up, but they didn't take full winds. Now, beyond COVID, what change has happened is the mindset of all global individuals, including you and me, where we want to see green. And capital is starting to flow in. As I said, when money starts to flow in, when you and I start asking for it, change starts to happen. The speed of it can change based on geopolitics, but it's here to stay.
All right, Gaurav, I really appreciate you coming early this morning to sit with us next to this beach and just give us a sense of what you are feeling in terms of the pulse of Energy Week. Really appreciate that. All right, let's just get back to what's happening in China, because we have Elaine Yu right there giving us a latest update on that particular meeting with the UK Prime Minister and Chinese President Xi Jinping. Elaine, over to you.
Hey, Amitoj. Yeah, we have some fresh lines coming out of the bilateral meeting between Prime Minister Starmer and President Xi Jinping. Starmer has told President Xi that the UK wants a more sophisticated relationship with China and that China is a vital player on the global stage and that it is vital that we build a more sophisticated relationship, he said. Now, China's President Xi told Starmer that the UK-China relationship in recent years have seen twists and turns that didn't serve the interests of their countries. And Xi continued on to say China stands ready to develop with the UK a long-term and consistent strategic partnership. He also said that more dialogue between the UK and China was imperative and that in the past, Labour governments have made important contributions to the growth of UK-China relationships. It's interesting to see Starmer using the word sophisticated here in describing the relationship it wants with China. So clearly referencing that it will be a nuanced one, especially in a complicated world. And also we know that Starmer has said that he wants a long-term and consistent relationship with China as well, not like the hot and cold that the two countries have seen. And for sure, this trip will be focused on the economic and trade ties that the two countries want to mend together. Amitosh?
Thanks so much for that, Elaine. There's a lot that's coming out of there. We'll continue to come back to you as and when there are developments. Now, we're counting down to the market open in Mumbai. We're back into, don't go anywhere. We're in Goa for Energy Week with a lot more. Welcome back. We're watching what's happening in South Korea, the country's biggest chip stocks, both reacting to earnings. SK Hynix is a market leader in high bandwidth memory or HBM chips, and continued demand for those chips helped it to double its quarterly profit to a record high. In its earnings call, Hynix said chip supply remains tight, but it's secured multiple long-term supply agreements for its next generation HBM4 chip. The stock up nearly 4%. Samsung Electronics co-CEO also flagged a chip shortage and cost pressures, but that it's on track to begin delivering its HBM4 chip starting this quarter. The company also a big beneficiary of AI demand. Its operating profit more than tripled on year, with the profit for its chip business surging 470% to about 11 billion, and all of this really taking the S&P 500 past 7,000 just for a bit before it came back down. Now, Indian markets is something we're watching very closely. The Nifty 50 coming online at this point in time. What can we tell you? Well, Nifty 50, as was expected, well, it's muted, slightly down. That number of 25,345 is interesting because you almost fell down below 25,000 a couple of days ago. It was a decent day, 160 points jump yesterday, and we're watching the geopolitical shifts that would potentially impact the market, the EU FTA, and of course the idea that Canada may come in March, the Canadian Prime Minister to India. The Nifty down at this point in time just a bit. We're going to be watching how this develops. Let's look at some of the movers that are going to be making a dent, of course, on what the market thinks in the Indian markets at this point in time. L&T earnings, Larsen & Toubro reported a weaker than expected third quarterly profit, hit by slower infrastructure order inflows and a one-time labor-related charge. The engineering majors' net profit fell 4.3% to 32.1 billion rupees, well below market expectations. The order intake growth slowed to 17% from last year's record surge, as projected approvals, land issues and tight state funding weighed on domestic infrastructure activity. Revenue rose 10.5%, but also missed estimates, while a one-off charge linked to new labor codes further dented earnings. Stock still up around 2.5%. All right. Mindspace Business Parks REIT posted strong earnings for Q3 FY 2026, delivering strong net operating income growing around 29% year-on-year. The growth was driven by robust leasing, portfolio expansion, and rental momentum in key markets, and the company remains focused on pursuing accretive acquisition opportunities. Ramesh Nair is the CEO and Managing Director of Mindspace Business Parks REIT. Thanks so much for joining us, Ramesh. I really do appreciate that. I just want to understand this from your perspective. I know this question has potentially been asked a couple of times in the earnings call, but for this moment that we're in, given everything that's happening globally, your properties are making nearly 30% more money than they did last year, and investor payouts also are rising. Can you tell us that this momentum will continue with surety?
Well, great question, Amitoj. What we've been seeing is a very strong and stable performance over the last 2 to 3 years. We are definitely benefiting from demand tailwinds. Ours is a high-quality portfolio. The growth is happening not just in the portfolio size, but we're also seeing visible pipeline growing. Obviously, you need to have a disciplined capital allocation when you're managing a REIT, which is nearly 44,000 crores in GAV. 2, 3 other big trends which we are seeing is cap rates are also compressing, Amitoj, and this is definitely going to lead to a NAV tailwind. Rental growth also is going up, and that's leading to increased NAV valuations. So together with that and cap rate compression will create a definite double leverage for us. We've always seen that NAV valuations typically lag rental growth, which will help us in future repricing. And also interest rates. Last year, March, our interest rates, total cost of funds used to be 8.15. 3 months back, it was 7.52, and that's dropped to 7.39. So all these things working in our favor.
Fascinating. Now, India has its all-time high demand for commercial spaces, and I just want to understand where you're allocating in that context, whether that demand will continue. What are you thinking about, putting your money? Is it data centers? Is it office spaces? Is it retail spaces? Just give us a sense of that.
It's a combination, Amitoj. So absorption numbers have been phenomenal. New records being broken every quarter despite all the global uncertainties. The final numbers for calendar year last year just came up, and that's the demand has gone up 14% to 57 million square feet, and this is an all-time high. And Q4 also, just Q4 saw a demand of close to 17 million square feet. We are very focused on 2 asset classes, grow our office pie. We already have 5 data centers. We want to increase that too. So offices, data centers. We also have hotels in our portfolio. We want to look at how we could grow that, and a lot of F&Bs to complement these asset classes. So that's the focus going forward.
Okay, that's fascinating. I just want to understand the sectors where the demand is coming from, because that gives us a picture of the Indian economy. How are, for example, hybrid work and these flexible space models impacting your leasing strategy, and at the same time these long-term rental yields that investors look forward to?
So two of our biggest markets are Hyderabad and Navi Mumbai. Hyderabad has clearly emerged as the most sought-after GCC hub in India. Out of all the GCCs who entered India last year, 46% of them went to Hyderabad. We also have a significant presence in Mumbai and Navi Mumbai, which people prefer because of the infrastructure, the BFSI talent, safety, traffic, AQI, quality of living, all those aspects. So these are the two cities where the focus is, and we are investing more. The other two cities, which is Pune and Chennai, we are growing in those two cities also.
Okay, I was just going to ask you which cities you're focusing on. Thanks for that. I want to talk to you about your competition, because the competitor Embassy has launched Embark, where they incubate these GCCs that you talked about. They make them help them, they grow them bigger, and a largest portion of their office demand was from GCCs. The competition is attracting to them, according to them. So I just want to understand, where does Mindspace stand in the GCC conversation with its three biggest competitors?
So, Amitosh, 54% of our portfolio today is GCCs. And if you look at the last 2 days announcement with the EU trade deal, today close to 12% of space take-up in India is from companies from Europe. 37% is American companies. So structurally, it's definitely positive for the office services sector. There were talks about services liberalization in the plan which came out, and there's a lot of EU-linked GCCs who we believe will expand more in India, especially after this deal.
Okay, we got to talk about the budget, because it's around the corner, a couple of days. What incentives are you expecting for the REIT sector? And I think this is perhaps more important, what can the government do to help retail investors, invest more in this sector? What will they be able to do that will make this sector more attractive to those traders, those retail investors?
So, Amitosh, this government has done an exceptional job with regards to the REIT, whether it was the recent reclassification of REITs as an equity instrument. This government also did the SEZ demarcation laws and multiple other things, whether it's on LTCG for REITs and other benefits. What we would want the government a little more to do is, obviously, if the government can increase the investment limits and increase, especially for the insurance, pension and provident fund sectors, if REITs are allowed to borrow directly from banks, also input tax credit, which is today available for residential and commercial sale, but not available for commercial leasing. If some smoothing on that can be done, that will also help us. So this would be the demands from the budget from the REIT sector.
Okay, but do you see it happening very quickly on a percentage scale?
Let's hope it happens. But this government has been super supportive. Every time you've taken a proposal as an industry body, we have the India REITs Association, IRA. Every time we've taken any proposal to them, they've always kind of looked at it.
Okay, really appreciate that. Ramesh Nair from Mindspace Business Parks REIT. Thanks so much for that on the occasion of your Q3 earnings, and congratulations on that. We're going to come back to you as and when there are more developments, particularly after the budget, hopefully. Now wrapping up our coverage right here in Goa at Energy Week. One of the key areas of discussion was diversification and transition to clean energy, especially for a growing economy like India. We spoke to many leaders in the industry, and also, of course, India's Minister of Petroleum and Gas himself, Hardeep Singh Puri, about this. Here's some of what all of them told us.
Okay. Today we are sourcing from 40 countries, and that gives us a kind of supply side resilience. And of course, we have created a strategic petroleum reserves. So we are right there.
Okay. Given where the crude prices have moved, the shipping prices have moved, we have found ourselves being able to buy a lot more variety of crudes over the years.
From where?
Our Western African crude has increased. Obviously, Middle East is a source which closest, and the shipping rates are, the shipping charges are the least there. We've also picked up South American crude of late, and increase.
Where from exactly?
I think it was a Brazilian crude, if I remember correctly, in one of our recent tenders we picked up. So we are looking at all. We picked up Guyanese crude, or one of the crude from Central America also.
Yeah.
And at times, even the US crude becomes attractive for our configuration.
India Energy Week is a case in point. This is the 4th edition, and you already have 75,000 participants. You look at the kind of people who are coming here. Earlier, other platforms, I'm not comparing them because comparisons are odious. But some of them are pure gas and crude oil portal.
Yeah.
Some are just gas, it's just gas.
Yeah.
Here you're talking about small modular reactors, the nuclear things. Here you're talking about biofuels, you're talking about a big side event on compressed biogas.
Yeah, there's a lot of green stuff happening.
There's a lot of green stuff happening, so I'm very happy that this is a platform providing all that.
All right, so that wraps up Energy Week for us. When we come back on Friday, we're going to be coming to you from, well, New Delhi, where the focus shifts to what the budget is going to look like. Thanks so much for watching Inside India this Thursday. Access Middle East is up next, so don't go anywhere.